Well, hello and welcome, Maverick traders. It's the January 9th edition of the Market Roundup. It's a Monday, the beginning of the week and the beginning of the year, I guess. I guess we're in the second week of January, but it's the beginning for me to decide what these markets are doing. I've got my 2 cents. Take responsibility for the outcome. You guys know the drill. So let's get into our market analysis because we finished pretty much flat. Very interesting move because this finish does not represent the move that we saw in the day. Yes, folks, January gave us its first head fake. I talk about this a lot. In fact, Rob and Darren mentioned this on the weekend class. I mentioned it on the Wednesday class as well, saying that, hey, we're in this nice channel. I'll get there here in a minute, but we could expect a lot of head fakes. So let's get into some of the action. First off, the advanced decline line finished slightly higher. And we have the above and the below, the moving average at comfortably above 57%, now pushing more towards the 60-40 mark. Gold and oil also experienced a little bit of a move. Oil up about 1.38%. Sentiment is difficult to define, but we are ready for it. It is that head fake that I'm talking about. So let's jump into the charts, because once you take a look at these charts, it becomes a little bit easier, I should say, to define. So this is kind of that area that we're looking at, right? Right above that, right just below that 390 mark. We've got this beautiful channel. We've had this for about 2.5 weeks going into the holidays. We talked a lot about that. And my conversation was, look, if it rolls over, I'm ready to go bearish. If it breaks out, I'm ready to go bullish. However, I did add, we're going to get some head fakes in both directions. Rob, Darren made mention of this, and this is exactly what we got. Let me go ahead and erase that so you guys can see. We have this beautiful little head fake. You could see that it was shooting up pretty high. All the markets were higher. In fact, let me just pop up daily charts on all three of these averages, and you can see how everything looked off to the races. We were up quite a bit, and then just kind of turned around and bled off to go nowhere. Doesn't mean that they're going to stop, because if you take a look, let me get my pin back out, we are still definitely at the upper part of this range. So even though this is a shooting star, right? This is or you want to call it a gravestone doji. This has got more of a body. I'll call it a shooting star, or they call it a spinning top. We've heard all sorts of different things. It's a reversal signal, or at least when it comes to price action, showing that it's running into some resistance and maybe rolling to the downside. My glass is half full, but since we are at the top of the overall range itself, I have to respect the fact that we can see bulls step right in and move us higher. So what does that leave us? Or where does that leave me? I just want to see something go somewhere. And at the beginning of the year, I like to build watch lists, and I've got some to look at. So let's get to them. But let me go through the rest of at least the cues here. And let's get into the heat map as well to see what participated. So the cues, same idea. It's a little bit more ominous because it is below its moving averages. It gapped up to it. Huge shooting star doji. Yep, that's a shooting star doji or gravestone. There you go. Take a look at that. That's a nice one. That's a shooting star doji. So looking a little bit more pessimistic, it could come back down to this 260 level if it rolls right over and we get into this bear side of things. But the markets could gather some more bulls after a little bit of a head faker test, and we could float higher. So what needs to happen, folks, is we need to be prepared for both. Now, what I am a little bit worried about, and I'm going to give you the breakdown of what my outlook is I've got this 0 to kind of -1 in the long term because of this area here. It just, even with a pretty good surge back above these moving average and even touching it here, coming back and consolidating, we still have a whole mess of stuff to deal with. Now, this isn't just on the Qs. This is also on the SPY. And even the diamonds actually has a resistance area that it's got to get to. Looking more like a bull pullback, but it is resistance nonetheless. So even if I get bullish, I'll get on my bullish trades. I just believe in my heart they're going to be a little bit shorter term. So let's take a look at the mumbo jumbo that this market left us with for today's move. A big gap up, moved higher, came back down, and didn't go anywhere. And you get this heat map of just all sorts of different colors. On the technology side, it's got a little bit more green with some of these things that have been beaten down for a long time. I'm going to go top right there almost to consumer cyclical. Tesla, Apple, Microsoft, Google, all coming off the bottom. Meta actually has been a company that's been beaten down, but has actually showed some pretty good signs of bullish pattern, meaning we could actually trade this. In fact, I think we looked at it on the weekend class as a potential bull. Healthcare, just bright red, just getting hurt for some reason, right? And then down on the bottom there, basic materials, utilities, you got some green. So it's kind of sporadic. This is not a uniform move to the upside or a uniform move to the downside. This was an absolute push-pull, head fake move for one day. Now, where does that leave me? I'm not going anywhere. I'm still going to sit at this zero because I didn't get the confirmation I'd like to see to the upside. I would love to buy these markets, folks. I really would. I'd like to get into them in this the January effect where you got people bottom fishing and getting rid of some of those some of the pesky stocks they want, or cashing into stocks that they have done really well and putting it into growth stocks. So I'm kind of an optimist when it comes to the beginning of January, but it just didn't gain any traction today. So the overall look on this is going to be similar. I just want to see a little bit more before I actually pull the trigger on this. Now, I did mess these up a little bit, folks. You guys can see that I had below the 20. We are not below the 20, but we are definitely below the 50, and the 20-50 slope is crossed. So this below the 20 should be green. Apologize for the little technical difficulty there. But my monthly outlook is still glass half full because we just didn't seem to sustain any sort of gain from today. That could change. Now, all that fun stuff being said, folks, let's jump directly into our potential trades because I've got bulls, sideways, and bears, and I'm ready to pull the trigger on any of them. I just want to see what's going to work first. Some of you guys have seen before. Some I've carried over from last week, but some other new scans have brought up some of my favorites. So let's get into some of these because the first thing I want to talk about is VTR, and this one was talked about yesterday, or I should say the weekend room, and it's got this nice potential of an ascending triangle or high base breakout. Let's get our pin out here, and you guys can see this goes all the way back to September. So it's got this resistance it's been working on for a while. The conversation is, hey, this isn't going to shoot up to 52, 54, 56 anytime. This is running into the same problem I'm seeing in the overall markets themselves. There's going to be a line of resistance that's going to stop them in the shorter term. But this is a great setup for targeted butterflies or diagonal spreads. So that's where I'm leaning on that. Folks, if I get into these, we get a little bit more deeper. That's what Wednesday's for. These are just all on my watch list. Let's get to the next one. This is Flex. Technology, electrical components, one of the weakest sectors for 2022, but this one had a pretty good move over the last few days. I'm kind of bummed on the size of the day because it really takes out my expected gains. I would like to catch it somewhere here below that 22 mark. I believe we talked about this here where it was showing that, oh, it's a bull pullback. It's confirming. Darren and Rob did a great job on covering it, and this just had that nice surge past it. Now I'm kind of stuck with this. Well, does it continue past and move higher, or is it going to hit its head up against resistance here, consolidate? That's my decision. I got to see what the markets do when it gets there. If the markets show some strength and they move higher and this continues, then I'm okay targeting 24 or maybe higher. But if we consolidate and stay within our same range, then I might play this thing sideways to down, or not sideways to down, but sideways up at that resistance of, what do you want to call this, guys? 23, 24, about 23 and a half. So that's another potential. This gold, we've talked about this on the Wednesday class over the last little bit, thinking that, hey, if the dollar kind of hiccups, it's a little bit overinflated, it pulls back. But when we got a Fed that's targeting over 5% expected, then yeah, you would assume that the dollar would continue to go strength and this would kind of stall out. Now, one thing I did notice, and I didn't zoom all the way in on purpose because I really wanted you guys to cast your eyes back to this area here. We're already kind of at this previous resistance level. And if you take a look at this pattern, it's like this huge kind of head and shoulders or inverted head and shoulders, but it's already back up to its resistance levels. So this might have moved a little bit past where I'd be comfortable getting into it with extending or a bigger move forward. However, if we do see some more fear come into these markets, and the volatility index is something that just really has been flatlined for a while, then we could see a flight to safety when it comes to gold. But the dollar just remains strong, and we might be a little extended. But it is on my watch list because, hey, it might be a way to kind of counteract some of those moves. Let's move to our sideways stuff. This is KR. Kroger was talked about. And I do like it. I like it a lot. One thing I do like about this is it did have a higher pivot. We got a crossover here, so it's back up above its 20. But look at all the trouble that it has ahead of it. So I expect, and in fact, let's draw this line. Boy, I can go all the way back to, well, June. Look at that. So this 45 at level that it's at right now, 46 is where it's at, but right around that area is a pretty hard line for this. So even if busts out, I expect a little bit of a hesitation at 48. This is why I kind of like it sideways. Sideways to slightly up, but more sideways. Chevron's another one outside of a sector that I'd be comfortable going sideways in because it's pretty reactionary and we've seen a lot of energy do very, very well. But I just like the way that it's kind of forming a consolidation pattern. See if I can get a different color here. And let me go put it on this downside. There you go, folks. Right across through here. So I do like this range. You got a crossover. It's in between that 170, 180. Condors. You could do targeted butterfly. If you want to go kind of half glass full, I'd be cool with like a 170, 180, 190 butterfly. I know that's wide, but this is a pretty volatile stock. So it just might be a little bit easier to absorb. Now, the other one I have here is this Toast Technology. Now, this might feel a little bit more bearish, but, I mean, it does have a little bit of a higher low here. So I like kind of where it's at. I would like to see this momentum. If indeed today was just the bulls tried the bear and then stopped, the bears kind of stepped in and pushed it back down. But if the bulls try again and the bears don't step back in, then this could finish somewhere up in this area or maybe up into the 19 area. So this is going to be more of a sideways kind of a range-bound stock that I'd be comfortable playing as well, which is why it's on my watch list. Kind of funny, folks. I don't have a lot of stuff that I want to get into today. It's just too early yet. And, it's a Monday. I just want to see if these stocks can get above that area or the indexes can get above that area before I pull my triggers. Here is AR. AR is a bear, and it is looking bearish. It's got this gap up for I don't know what reason. Think of that. We've seen this before. We've seen this stock like to gap up, and when it does, it doesn't do very well. Here's one it kind of consolidated for a minute, but inevitably it started to fall. So I don't really believe in these gaps as of late, as of the last few times it has. It's in the energy sector, which is a stronger sector, but if the markets roll over, I imagine this doji might confirm, and we might actually not only just revisit 28, but get a breakdown a little bit lower than that. So I'd be more comfortable being aggressive if I see these markets completely fail and break that lower channel. This is ACN. ACN is very similar. It's got a little shooting star doji going on. We like these. Good pattern. I just like the fact that it barely poked its head above its 20. It's got a flattening 50-day moving average. It didn't really do much when it came to its last pivot. It's just kind of churning sideways. So something sideways to down here. If you want to get aggressive to the bear side, wait for it to break the 260. But I see $10 in here that this could float down to. Considering we do have the CPI number and some Fed speak this week, we'll see. But keep it on your watch list. It's on mine. And then the last one is TRMB, Trimble. I liked it just because it was a pretty uniform bear rally back up to a resistance area. You can see right through here, just 52. It's above the 52, but there's kind of a gap up with this doji of where do we go from here. Now the volume was pretty decent on this. Not really, you have to zoom on it, but I like the fact that if these markets roll over, I'm in the right sector, and I just like the fact that I'd supersede everything and shoot for 48. So this would be something I'd be a little bit more comfortable or patient with if the markets decide to come all the way back down through their channel and fall apart. So you can see that the overall expectation for me is still to the bear side, and it should be. I mean, the longer term trend's still there. But I do not want to be caught to the bear side if these markets are going to have a January effect or they're going to continue to move higher. Or if there is some good news. I'm totally fine with good news. That's why we look for both up, down, and sideways. So bearish finish to the markets, but still at the upper part of its range. This was an absolute head fake for you guys who had never seen one before. That's what they look like. They're really cool, right? Doesn't mean we can't go right up and try it again, and this time the bears don't jump in. But it was a really good push to the expectations of traders saying, look, we're at the higher part of the range. It's January. Let's buy. Absolutely washed them all out through the rest of the day. Keep that in mind before you do anything too drastic on the longer term. If you're going to do stuff to the bull side, you still got to respect the resistance areas that are still left in these sectors. And to the bear side, be patient. Wait for some bad news to come in. Let's see a CPI number off. Let's see the Fed get a little bit more scared because these markets just really don't. They're not afraid of the Fed keeping that rate at the high in the mid fives. They don't expect that. They expect these numbers to get better and the markets to take off, or excuse me, things to get better in the economy, so then the markets will take off. So we're optimistic in the stock market with a pessimistic Fed. So shorter term slowing, longer term mixed. That's what's got this push and pull we're going on. Rob talked about that on Friday. Brought up two good examples with the employment report showing that they're adding a lot more jobs, but the unemployment report is showing that we are going in the correct direction. So we'll see what happens. The Fed's going to stick to where they're at, but they're going to keep talking to us. That's going to be what they say and what's reactionary to the markets. We'll just take it for what that is. Check on any potential trade candidates. If you've got earnings reports, we're out of the season. I think we got a whole lot more to focus on when it comes to Fed speak. And more importantly, we got to start gauging on the sentiment. Sentiment's too hard to gauge early on in the year. We'll see if that January effect takes effect or if it's just going to kind of peter out, and we'll see where these markets take us based on the reaction to what the Fed does based on what they see in these economic numbers. All right, too early to tell, but hey, let's start building some watch lists in all directions. Thanks for joining me, folks. Talk to you next time.